Welcome to Gate Gain, where we bring you clear, straightforward insights to help you navigate the often confusing world of auto insurance. Choosing the right coverage for your vehicle can feel overwhelming, but understanding the basics makes protecting your hard-earned money much easier. Today, we are diving deep into two critical components of any auto policy: comprehensive coverage and collision coverage. By the end of this guide, you will know exactly what each option protects and how they differ in real-world scenarios. We will help you decide which combination fits your budget and lifestyle. Auto insurance policies are built from several distinct layers, with collision and comprehensive forming the core of physical damage protection. While liability coverage pays for damage you cause to others, physical damage coverage focuses entirely on fixing or replacing your own vehicle. Drivers frequently mix up collision and comprehensive because both help pay for repair bills after a bad situation. However, the distinction comes down to the specific cause of the damage, specifically whether a moving crash occurred or an external, non-crash event. Collision coverage is designed specifically for situations where your car physically hits another object or rolls over. This includes standard traffic accidents, such as colliding with another vehicle at an intersection or backing into a parked car. It also applies when your car hits stationary objects like a guardrail, light pole, tree, or concrete barrier. If your vehicle swerves on black ice, flips into a ditch, or suffers damage from hitting a deep pothole. Collision coverage steps in to cover the repairs, regardless of who was legally at fault. Comprehensive coverage, despite its broad name, focuses on non-collision events that are usually completely outside of your control. This includes damage caused by unpredictable weather events like hail storms, fallen tree branches, windstorms, floods, or heavy snowfall. It also protects your vehicle against criminal acts such as vehicle theft, attempted break-ins, or malicious vandalism like keyed paint. Additionally, comprehensive handles glass damage, windshield cracks, fires, explosions, and accidental strikes involving wild animals like deer. Understanding these differences ensures you have the right protection for every journey. Thanks for watching Gate Gain. To understand how these coverages operate during a claim, you must understand the role of your policy deductible. A deductible is the out-of-pocket amount you agree to pay toward repairs before your insurance company pays the rest. For instance, if you have a $500 deductible and a storm causes $2,000 in damage, you pay $500 and your insurer pays $1,500. You generally select separate deductible amounts for comprehensive and collision when setting up your policy, which directly influences your overall monthly premium costs. Choosing higher deductibles typically lowers your monthly insurance bill because you agree to absorb more initial risk during a claim. Conversely, selecting lower deductibles means your monthly payment will be higher, but you will pay far less out of pocket if an incident occurs. Finding the right balance depends entirely on your financial cushion and how easily you could cover a sudden out-of-pocket expense. Many drivers choose a slightly lower deductible for comprehensive coverage because non-accident events like stone chips or falling branches are far more common and unpredictable. A fundamental legal distinction between collision and comprehensive involves fault assessment and its impact on your premium. Collision claims frequently involve an evaluation of fault by law enforcement and insurance adjusters. If you are found at fault in a collision, your insurance company pays for your vehicle repairs, but your future premium rates may increase upon policy renewal. Comprehensive claims, on the other hand, are almost always categorized as non-fault events because you cannot prevent unpredictable hazards like heavy hail or a jumping deer. While comprehensive claims rarely carry the same financial penalty as at-fault collision accidents, repeatedly filing small claims can still impact your standing with an insurer. Insurance companies analyze risk patterns over time, and a high frequency of claims might cause your premium to rise slightly regardless of fault. Understanding this dynamic helps you decide whether it is smarter to pay for minor repairs out of pocket or file a claim through your policy. Reserving your insurance for significant financial losses helps keep your long-term insurance rates stable and manageable. State laws across the country strictly require drivers to carry minimum levels of liability insurance to legally operate a vehicle on public roads. However, no state legally mandates that drivers carry comprehensive or collision coverage on their vehicles. From a purely legal standpoint, buying physical damage coverage is optional, leaving the decision entirely up to individual vehicle owners. While the government will not fine you for skipping these coverages, other legal agreements in your life might make them absolute requirements. If you purchase a car using a bank loan or sign a vehicle lease, your lender or leasing company will legally require physical damage coverage. Lenders maintain a financial interest in the vehicle until the loan is paid in full, and they want to protect their investment against accidents or sudden total loss. Loan agreements usually mandate that you maintain both collision and comprehensive coverage with deductibles not exceeding a specific limit, often set at $500 or $1,000, for the entire duration of your financing term. Failing to maintain the required physical damage coverage on a financed car can lead to severe consequences from your lender. If your policy lapses, the financial institution receives automatic notification and may purchase what is called force-placed insurance on your behalf. Force-placed insurance is significantly more expensive than standard insurance policies and offers far less protection, covering only the lender's financial interest. Keeping your own comprehensive and collision active ensures continuous, affordable protection without unnecessary lender fees. Once your auto loan is paid off completely and you hold the physical title to your vehicle, the legal requirement to carry comprehensive and collision disappears. At this stage, deciding whether to keep full coverage becomes a purely financial calculation based on your vehicle's current market value. As vehicles age, their overall market value naturally depreciates, meaning the maximum payout an insurer will provide in a total loss steadily decreases. Evaluating this shift annually helps ensure you are not paying more in insurance premiums than the car is actually worth. Insurance adjusters evaluate damage using a formula based on actual cash value, representing the fair market price just before the incident occurs. If repairing damage from a crash or a fallen tree costs more than a specific percentage of the actual cash value, the insurer declares a total loss. In a total loss scenario, the company pays you the car's market value minus your selected deductible. A reliable guideline used by financial experts is the 10% rule when deciding whether to drop physical damage coverages. If the annual cost of comprehensive and collision exceeds 10% of your vehicle's value, it may be time to consider dropping them. For example, if an older car is worth $2,000 and full coverage costs $300 a year, self-insurance might be smarter. Dropping collision coverage while keeping comprehensive coverage is a popular strategy for owners of older, fully paid-off vehicles. Collision coverage typically makes up the largest portion of your premium because vehicle crashes are frequent and costly to repair. Dropping collision saves money while keeping comprehensive ensures you remain protected against events like theft, fire, or severe storm damage. Understanding animal collisions is critical. If a wild animal runs into your moving vehicle, it is processed as a comprehensive claim. However, if you swerve to avoid the animal and instead crash into a tree or ditch, it becomes a collision claim. This distinction is critical because a collision claim might be listed as an at-fault accident, whereas a direct strike is non-fault. If heavy hail dents your roof or a flood submerges your engine while parked, your comprehensive coverage handles the repair costs. Conversely, if you hydroplane into a roadside barrier during a rainstorm, the resulting damage falls under collision coverage. Theft and vandalism fall exclusively under comprehensive coverage, providing essential peace of mind if your car is targeted by criminals. Personal items stolen from inside your car are covered by home or renter's insurance, not auto insurance. Windshield repair and glass replacement represent one of the most frequently utilized aspects of comprehensive insurance. Many insurers offer zero-deductible glass coverage, allowing you to fix chips or replace windshields without any out-of-pocket expense. When setting up coverage, you may encounter options like original equipment manufacturer parts or custom equipment protection. Rental car reimbursement is an optional add-on that works alongside your coverage to maintain your daily mobility. Gap insurance is essential for leased cars, paying the remaining loan balance if your car is totaled and you owe more than its value. Emergency roadside assistance helps with minor operational breakdowns, such as a dead battery or changing a flat tire. After ensuring everyone is safe, document the entire scene thoroughly using your phone camera to speed up the claims process. Maintaining accurate maintenance records strengthens your position during insurance claims and helps justify a higher valuation. Comparing quotes from multiple reputable companies annually is one of the most effective ways to manage your vehicle coverage costs. Driving safely and installing anti-theft devices naturally lowers your long-term insurance expenses and your overall risk profile. Understanding the division between comprehensive and collision coverage empowers you to make smart, cost-effective decisions. Thank you for watching this guide on gate gain. Please hit the like button, subscribe, and leave your questions in the comments below.